Here's one area of data point as well here. So new home sales actually down just 10.9% for the month of September on a month-on-month basis. We were looking for -15. We got -10. So it's still bad, but not as bad. What does that wind up meaning then for the Fed? Does that mean we're seeing some stabilization in housing, and that's a good or a bad thing? I think understanding the reaction function to the data is quite difficult.
Yeah, and this has been a data series that's been all over the place. We got that plus 28 last time around in August, which was just weird. Yeah. And we didn't quite understand what the implications of that were. So maybe actually the new home market is holding up a little bit better than anticipated. As you say, this data is much better. The range, I have to say, was -30, this is the month-on-month number, to 2.2. So a huge range in terms of that data, Alex. And we've come kind of, as you say, to the more positive end of that spectrum.
Yeah, but rates, 7%, 30-year fix, ouch, that hurts. Okay, so let's pull all this together. That leads us to our question of the day. Bad earnings plus bad, maybe we'll put in air quotes, data, equals happy Fed. Well, joining us now to break it down, Bloomberg stocks reporter Jess Menton and Bloomberg International Economics and Policy correspondent Michael McKee. That just goes even further to the whole bad news is then good news if you're a stock investor or if you're a Fed governor. What do you think?
Well, yeah, that's probably the case. The Fed is looking for signs that demand is slowing, and they're getting it to a certain extent in the new home sales data and some of the other data that we've gotten over the past couple of days. The Fed obviously affects real estate more than anything else, but new homes are a little bit tricky because they're based on contract signings a couple of months ago and not on, they're based on contract signings now and not on what's going to close. So there may be some of these canceled, and also builders have backlogs. The disturbing data in the new homes numbers is the median price jumps to $470,600 from $435,800. That is not what the Fed wants to see, because this home prices continue to feed with a very long lag into CPI, and it's just going to keep the pressure on.